Today is March 20th, 2026, and as the sun rises over the New York skyline, we are witnessing a literal financial crime scene in progress. While the American public has been sleeping, tucked away with their 401ks and index funds, the largest overnight physical metal transfer in modern history has been unfolding on the other side of the planet. The Shanghai Gold Exchange has been active, and the Eastern Hemisphere is staring at a digital hallucination created by Wall Street. They see a paper price of silver, what the COMEX calls a spot price, smashed down to $76.38 after being over $80 just days ago. But the East isn't panicking, they are salivating. They have just been handed the greatest physical silver discount window since the 2020 COVID crash, and they are buying everything. This is not just a market fluctuation. This is a survival guide for a burning theater. If you are sitting on the sidelines feeling scared of that $76 number, you need to realize that the Eastern Hemisphere just validated every single physical ounce you own. The paper price is a digital fiction. The real price, the physical price you pay to actually hold silver in your hand, has been decoupling from the COMEX for months. We need to look at the hard data because the numbers are screaming. The COMEX, the primary futures exchange in the U.S., just reported that registered silver inventory, the actual metal available for delivery, has fallen below 90 million ounces. This is a 31% decline since October 2025. We have lost nearly a third of the deliverable supply in just 5 months. Here is the number that should make your hair stand up. The coverage ratio is sitting at 13.7%. This means for every 100 ounces of silver promised on paper, in futures, options, and ETFs, there are only 13.7 ounces actually sitting in a vault ready for delivery. Historically, anything below 15% is a crisis. Today, on March 20th, 2026, the paper leverage ratio is 7.3 to 1. There are 7.3 paper claims for every single physical ounce. In dollar terms, the entire registered silver supply backing the most important futures market on Earth is worth about $6.87 billion. To put that in perspective, Apple's market cap is over $4 trillion. The silver that backs the global system is worth less than the petty cash Apple keeps in its drawer. This is the absurdity of the situation we are in today. A parabolic pattern of acceleration. This isn't an anomaly. It is a systematic, multi-year drawdown that went parabolic in 2026. In 2021, COMEX registered silver peaked at over 300 million ounces. By October 2025, it fell to 130 million. A 56% decline. In the last 5 months leading up to today, another 31% disappeared. The rate of decline is exponential. Compare this to the 2008 financial crisis, where inventory dipped only 15% over a year, which was enough to drive silver toward $50. We just did double that damage in half the time. In 1980, the Hunt brothers cornered the market with 100 million ounces and broke the system. Today, the Eastern Hemisphere is on pace to drain more than that in a single quarter. We aren't dealing with 2 billionaires anymore. We are dealing with sovereign nations like China and India, entities with balance sheets that make the Hunt brothers look like they were playing with pocket change. Shanghai versus New York, the arbitrage machine. You must understand the difference between the COMEX and the Shanghai Gold Exchange, SGE. The COMEX is a paper market where contracts settle in cash, digital ghosts of wealth. The SGE is a physical market. When a Chinese entity buys silver, it leaves the vault, gets loaded on a truck, and leaves the Western supply chain permanently. Throughout 2025 and 2026, the SGE has traded at a massive premium to Western prices, sometimes as high as $10 an ounce above New York. This creates an arbitrage machine. Traders buy cheap paper silver on the COMEX, demand physical delivery, and ship it to Shanghai to sell it for a massive profit. This is a death spiral for the West. The more Wall Street suppresses the price, the bigger the Shanghai premium grows, the faster the vaults drain, and the closer we get to a force majeure event, a legal declaration that the COMEX cannot fulfill its promises. If that happens, silver won't go up 10%. It will reprice overnight by 200% or 300% to match the physical reality. The $36 trillion debt and the dying dollar. The geopolitical dimension is the real story of March 20, 2026. The United States national debt has crossed $36 trillion. To visualize that, a stack of $100 bills that large would reach the moon and back 47 times. The annual interest payment alone is now over $1 trillion, more than we spend on our own defense. While we struggle with debt, the BRICS nations, China, Russia, India, etc., are de-dollarizing. They are conducting trade in local currencies backed by hard assets like gold and silver. China has been accumulating gold at a pace of 200 metric tons per year. Silver is at the epicenter of this shift because it is both a monetary metal and an industrial necessity for solar panels, EVs, and 5G. With the Middle East in turmoil, the Producer Price Index, PPI, has hit a 3.7% annualized rate. Inflation is accelerating, and the Federal Reserve is trapped. They can't raise rates without exploding the debt interest, and they can't cut rates without fueling the inflation fire. The East knows the dollar is dying a slow, mathematical death. The V-shock and the gamma flip. As traders log into their terminals today, March 20th, 2026, they are going to see that the global physical inventory they planned to buy is gone. This sets the stage for a V-shock, a violent price reversal. The villains are the algorithms used by bullion banks to control volatility. These algos sell paper to cap the price and maintain an orderly market for the banks. But they are over-leveraged. 1 bar of silver is often pledged as collateral for 7 different transactions, a process called rehypothecation. When Shanghai demands the physical bars, the music stops. Today, the algorithms may be forced to switch from suppressing the price to chasing it. This triggers a gamma flip in the options market. In a market with only 13.7% coverage, there is no ceiling. The price goes wherever the physical market says it should. Mining reality and retail truth. The cost to actually mine silver is currently between $22 and $28 an ounce. While $76 sounds high, the physical market is telling a different story. Physical premiums on coins and bars are running $8 to $20 over spot. Retail buyers are already paying nearly $100 an ounce. The paper market is a lie, and the physical market has already repriced. The latest Commitment of Traders (COT) report shows bullion banks holding their largest short position since 2025. Every time they have doubled down like this in a tight market, in 2010, 2020, and 2024, the snapback was violent. The CBDC matrix versus physical sovereignty. Finally, we must consider the rise of central bank digital currencies, CBDCs. Whether it's the digital yuan or the digital dollar, these are about control. A CBDC allows a government to freeze your account or set an expiration date on your money. The people buying silver today, March 20th, 2026, understand that physical metal in a safe is outside the CBDC matrix. It cannot be programmed, and it cannot be deleted. It is the ultimate tool for financial sovereignty. The day the market changes. Today, the paper market and the physical market are officially diverging. Wall Street can control the screen price during the day with leverage and algorithms, but the East buys the metal at night. The price on your screen is just a promise, and in a world of $36 trillion in debt, promises from over-leveraged banks aren't worth much. Don't let a paper price drop engineered by an algorithm convince you to sell the one asset every central bank is trying to accumulate. The story of March 20th, 2026 is the vault drawdown. It's the 88 million ounces of registered silver trying to back 500 million ounces of paper claims in the biggest delivery month of the year. The vaults are draining. The paper price is a lie, and the real market just told you exactly where silver is going. Good look.